when I think about crypto, when I think about Bitcoin and other, I think about the hacks. I think about the thefts. There was a feature on television this past week on one of the major networks about recent hacks. And, I think about FTX and Terra Luna. And so how do you differentiate what you're doing? I wouldn't ask you to explain that plane crash over there didn't have anything to do with you, but how do I, as someone who doesn't really understand the world you operate in, how do I contrast FTX and Terra Luna with blockchain?
Yeah. So when you're thinking about crypto and holding assets, right? So the simplest interaction that a consumer can have with the industry is to own the assets outright, right? Direct exposure. So say you want to own a Bitcoin or own a fraction of a Bitcoin, you hold it in a wallet or an account. There are two types of accounts, custodial and non-custodial. Custodial account is like a savings account at a bank, right? Where your funds are deposited into a master account and noted on a ledger, right? When you go to deposit your funds at Wells Fargo, it's not like they're just holding them separately for you, right? It goes into one big pot. Yeah. And if for some reason they were hacked, that pot would be exposed. On the other hand, you have non-custodial brokerages and exchanges that are more like safe deposit boxes, right? Where it takes your key and the bank's key to open the safe deposit box. Both of those exist in crypto, and there's reasons for both. Blockchain is the largest non-custodial brokerage in the world. So most of our accounts start as non-custodial. So if you wanted to hack our platform, and I'm fine to say this on a podcast, I've said it publicly before, you'd have to hack 90 million accounts, right? Which makes the platform inherently safer. Yeah. Now it does come with drawbacks, which means transactions are a little slower, right? A custodial environment's always gonna be a faster transaction settlement time. Instead of it taking a couple of seconds, it could take up to a minute, which maybe doesn't seem like very long, but in the crypto world, that could actually be a long time.
Right.
And so there are some drawbacks to it. I think today, most of the large crypto companies, most of our contemporaries, whether they're custodial or non-custodial, they have licenses from all the major regulators around the world. They have SOC 2 compliance. This means they've gone through the rigor of ensuring that their platforms are inherently safe. What happened with FTX wasn't like a data issue, right? That was a human issue, right?
That was fraud.
That was fraud.
Yeah.
Terra Luna,
right?
That was also bad software, but it wasn't necessarily, and you certainly could argue fraud, but like that wasn't a hack, right? We're talking about like Mt. Gox, which is sort of the famous one from 10 years ago, and there have been other hacks since then. Those are primarily on very small platforms. Yeah. That's not to say there aren't exploits, right? I think every year we hear about some sort of data exploit at every tech company, right? You see it at financial institutions. Bad actors are always going to find a way, but the question is, can they get very far? These days they can't. So I would say generally if the company you're working with, if the crypto company you're working with has its licenses issued by states in the US or the EU or the UK, or the federal government, once we have a licensing regime in place, you can be pretty confident that your assets are safe.
Do you want a licensing regime? Do you want more regulation? Is that better for you, for the industry? I'm kind of a libertarian, so I'm hesitant to invite regulation. At the same time, there are industries where it seems like, particularly in their nascent stage, that that could be a protection.
So we absolutely want a permanent regulatory framework. Yeah. And it's consumer protection isn't like a bad word, right? We firmly believe in it. We don't want our customers to lose their assets, either because they invested in an asset that was fraudulent or because our platform isn't safe. We also realize that we can't control everything happening in the industry, and regulation ensures that we're all meeting a minimum threshold, but it also gives us a level playing field, which is what we want. The previous administration was pretty tough on crypto, right? At the same time, they are also the ones who approved the BlackRock ETF in Bitcoin, right? So, the current administration and the current Congress, bipartisan in its support. I think there are 35 states that have MTLs that are applicable for crypto. So the US has leaned into this, and we support it. The market structure bill, this is like, basically, is crypto falling under the CFTC or the SEC question? That's being debated at Congress. I don't know if we'll see an answer this year. We'll certainly have an answer before the end of this administration. Yeah. And that clarity would help. But in the meantime, the CFTC and the SEC are being reasonable in their rulemaking about crypto.